live session on large cap funds. For today's session, we have with us our esteemed partners who will address some of the frequently asked questions about the large cap category. We will also discuss about the markets and Nippon India Large Cap Fund. To give a brief introduction of the panelists, our first panelist is Mr. Rupesh Bhansali from GEPL Capital. He has more than 20 years of work experience in financial markets, managing different segments, including debt, ETF, corporate finance, mutual funds, and equity. Our second panelist is Mr. Vikas Agarwal from ARC. Providing the best-in-class service and solution to our clients. Our final panelist is Mr. Pratap Jain from Dhanya. He has over 15 years of experience in the financial services industry. He's a computer engineer and a certified financial planner. A very warm welcome to all the partners. So to start today's discussion, my first question is to Dhanya ma'am. Dhanya ma'am, why should investors consider large cap funds as a part of their portfolios? What are the benefits that these funds offer?
Yeah, large cap stocks are mainly established players with the proven business models. And these stocks are adding more stability to our portfolio. And obviously, Indian large caps are still small in the global context. We can compound at a higher rate for many years. So, and providing great opportunity to the Indian investors. That's the that's why. So, large cap is giving more opportunity for investors.
Sure. Bhanu sir, let's talk about the markets now. So, geopolitical tensions and rising US Treasury yields are causing volatility in the markets. Is the current market environment conducive for investing in large cap funds?
Well, our view on the medium to long term is very positive on the large cap segment of the Indian markets. There are multiple reasons for the same. One, our domestic economy is showing a lot of resilience and recovery in spite of a lot of geopolitical uncertainty that you said about. There is a strong capex growth that is taking place both on the government front and the private sector as well. The huge thrust of the government of India on the manufacturing and the rural demand that is picking up is also going to add to positivity in terms of investing in the large cap sectors. What we have noted in past 6 months that the inflation trends in India has started to moderate and it's going down. This is going to give a lot of monetary headwinds to ease the interest rates in the coming times. So that is going to be very conducive in terms of large cap investing. The external sector that is supported by the services sector, it is bringing in a lot of stability and a healthy foreign exchange, which is needed for rupee stability. So that can help us in mitigating the global uncertainty that you spoke about. The large cap stocks are generally less volatile, as ma'am said, and they are more stable than the mid caps and the smaller caps counterpart, which makes them ideal in terms of the current market scenario. Large cap stocks are also offering a good valuation in terms of their underperformance since past 2 years or so. So that looks like a sweet spot to enter in the large cap funds. Though there are geopolitical risks and there is an election which is upcoming in 3 to 6 months, but we are very much optimistic on the medium to long term. Thank you.
Sure, sir. So as you mentioned, from medium to long term, outlook remains positive. So large caps are better placed to handle any interim volatility in the markets, and at the same time, they are better placed in terms of valuations. Now, Rupesh sir, coming to you, there has been a debate about active versus passive investing, particularly in the large cap space. Request if you can share your views on the same.
Surely. So normally consider that the active funds are generally provide more alpha, which is higher return compared to over the benchmark. It always be happening by the passive with the replica of the indices returns. Normally alpha generation is consider that it will be happen only to the mid and small cap segment and not to the large cap segment. But if we see any active strategy allow the fund manager to take higher exposure to capture the upside or the opportunity in those company or sectors and generate the better return than the passive, where the passive fund have to manage as per the index only. So active still have the better opportunity in the large cap segment and not only on in the mid and small.
Sure, sir. Now coming to Nippon India Large Cap Fund, Vikas, sir, what is the investment strategy of this fund?
So, as you already mentioned about the active versus passive, correct? There's a lot of debate about the what active is good or passive is good. So, it's very important for the fund managers to have a view of what kind of strategy they are following it. If the fund is following the replica of the index, so definitely the this index will be do better. But when you talk about the Nippon India Large Cap Fund, so this fund invests in the business with a dominant market player. Correct. So the portfolio is completely not diversified but not diluted. So in that case, this fund already maintained a significant overweight toward all the caps in the market. Suppose if the financials are there, if the index has a larger financial ratio, but the fund manager feels that the financials should not be the part of it because the valuations are high, so they can increase their exposure toward some auto or auto ancillary or anything else. So that creates a big significant difference to generate the alpha of the period of long term as compared to the index. So the endeavor of all the fund manager is to generate the alpha over the period of long term on the edge of the index.
So the fund takes high conviction bets with an aim to generate alpha. Sir, if you can also explain to us about the current positioning of the fund, which sectors is the fund overweight and underweight on?
Exactly. So as I already mentioned, but about the financial and all, so this fund is basically taking the high bet on the consumer staple, correct, as compared to the benchmark, which is S&P 100, also on the consumer discretionary and some industrial as well. Why? The logic behind it, as already my fellow partner mentioned. So currently, a country, India, is going through a kind of, it's called a Amrit Kal. Correct. The PM usually uses Amrit Kal. When the large companies are really doing good and the domestic demand is getting higher and higher. So consumer staple means that index the heavy weight into the relatively better valuation than the gradual improvement of the earning. Okay. So that also help us to generate a weightage on the as compared to index and to the fund, and that create a more returns to the investor hand when they are comparing the return with the index. Consumer discretionary, there's a strong demand from the all side, roads are building, everything. And I'm just taking the strong example of the one of the large company in India, let's say. So what you are talking about when India is going toward the highway, they are building the roads. Okay, the biggest company is L&T only. So then the stock is when the company, these are just examples, just a hypothetical thing only. So when the fund manager have a good kind of thought process that they are going through the multi-layer of their portfolio that can create alpha for the investor. That's a big bet for the good fund manager. That is why Nippon India Large Cap Fund considered to be a better off as compared to the other for their peers.
Sure, sir. So, Dhanya ma'am, when you are evaluating a mutual fund scheme, how important are risk management practices for you? And also, if you can tell us about some risk management practices followed by Nippon India Large Cap Fund.
Actually, risk management ensure that the fund performance is relatively consistent and not very volatile. Nippon India Mutual Fund is following a well-structured fund casing framework. Actually, they are following the first one is defined sector deviation limit. That's the first strategy. That is, top 4 benchmark sectors usually count for 60 to 65% benchmark weights. Hence, with a very, if you have that higher participation in the top sectors, Nippon Mutual Fund have defined the maximum deviation as under in financial sectors is only 6%. And the second point is stock concentration. And that based on the internal assessment of business risk, stock have been classified under the rating category, that is A, B, C, and D, with A being the best and D being the worst. while it may appear all the investments should be concentrated in A or B bucket, the stock may not be reasonably priced, but at the same time, the stock rated C or D may offer opportunities at reasonable valuations. And the cumulative stock concentration limit will be maximum 35% in C and a maximum 3% in D-rated stocks. And the third point they are focusing is active share. In that, the percentage of fund holding that is different from the benchmark holdings. A fund that has no holding in a common with the benchmark will have an active share of 100%. And a fund that has exactly the same holding as the benchmark considered will have the active share of 0% also. Considering the key imperative for the fund to generate reasonable alpha with the consistent returns, the fund would have the maximum active share of 60. The count will be 60. And the last point is cash call. The fund would not take any cash calls. And the cash level will be less than 5% only. These are the frameworks Nippon India Mutual Fund are following for the risk management. So the fund also performing better. Thank you.
Thanks, ma'am, for elaborating it, so well. Rupesh sir, over the last 1 year, Nippon India Large Cap Fund has outperformed the benchmark and has outperformed the category. Can you please explain on what has led to this outperformance?
Yeah, sure. So the first scenario, any funds have the two biggest contributors for the return. First one is the allocation and second is the selection. So selection of sectors or the top. That are the two parameters which generate the returns, and we had seen in the last 1 year Nippon had done that outperformance. If we see the portfolio attribute of the Nippon Large Cap in last 1 year, the biggest contributor for them is the industries, consumer discretionary, and financial. The three segment or the sectors had been the contributors in a big way. If we go on the industry, the allocations had given the positive effect of around 0.3%, while the selections had added 3.3% at the attribution on a positive front. If we do on the consumer discretionary, which had the weightage in allocation effect had been almost around 0.4, and the selection criteria had added almost around 2.20% additional benefit. If we go on the financial side, which had been, they had the underweight on the allocation effect, which was in negative 0.06, but on the selection base, if we do the attribution, it had delivered 2.5% positive effect. So overall, it had delivered almost around 11% positive contribution if we do all the attribution for all the sectors. But the three positive sectors are the industry, consumer discretionary, and financial, which had paid off very well for the Nippon Large Cap in last 1 year. And we are hoping they will continue in the future also.
Sure, sir. Bhanu sir, as we discussed earlier, there is a strong case for investment in large caps today.
Yeah.
So in the current market context, so if an investor wants to enter today, should he go for lump sum investments or stick to SIPs in large caps?
See, going by the current market situations, we are seeing the war taking place in various places, and there is a danger of spreading it. And also, we have elections in the month of May 2024, which is 7 or 8 months down the line. So we would advise investors to break their investments in 8 to 10 parts and start deploying their money instead of just having a lump sum strategy or a SIP strategy. Though SIP is an evergreen strategy, but current market situations allow us to take advantage of investing in large caps in next 8 to 10 months. Thank you.
Sure, sir. With that, we conclude today's session. Thank you to all the partners for sharing their valuable insight. I'm sure our viewers will benefit from it. To summarize, within the large cap space, there are a lot of compounding opportunities. There are a lot of opportunities to generate alpha. Also, it makes sense to consider large cap funds in the current market context. Domestic economy continues to be on a strong footing, and investment cycle seems to be coming back after a decade. Global macros seem mixed and challenging, which along with domestic events like upcoming elections may add to some volatility in the near term. However, with a positive medium to long-term outlook, large cap funds, make a lot of sense for investment, as is a better place to navigate any sort of interim volatility. Thank you so much, everyone.
Thank you.
Thank you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.